Hi, good morning, everyone. Okay, half of you still alive. Okay, good. Just to check, my name is Seah, and before I begin, can I just check how many of you have already invested or are already investing? Can I see a raise of hands? How many of you have already invested but you're pretending not to? Okay, just joking. You know, because sometimes, right, when I talk to people, some people are actually like being ashamed of being investors. Okay, so today I'm going to share with you my background, certain experiences I have, and how I invest on my own. Because these are some things that I can do it at home on my own, and it is simple and it can be easy if you do it correctly. Is it okay? Okay, my background. I graduated from Nanyang Technological University, from a business school. May I just check? Let's make a guess. How many of you think that the university taught me how to invest? Oh, you all came from the same school. Hey, well, how come some people want to take my certificate? But it's okay, never mind. Take me inside also. Okay, so in fact, to be very, very, open, they did taught me some basics, and later it is just how we apply it. A lot of us do not know how to apply what we have learned. So subsequently, I have learned that what I learned in university can be applied, but initially I don't know how to. In fact, okay, just now, Mr. Mu from from UOB, he mentioned Warren Buffett. Okay, by the way, how do we pronounce his name again? He's called Warren. Can we say his name? Warren Buffett. Okay, Warren Buffett. Okay, because a lot of people say buffet. You say buffet, I know you're from Singapore. Okay, but it's okay. The thing is, right, Warren Buffett, do you know where he learned his investing from? From his professor, Benjamin Graham. But you know what my professor told me? My professor told me not to invest. He said, hey, don't invest. You just put your money somewhere safe in the bank. Okay, but Mr. Roberts already mentioned, you put your money in the, if you think that putting in the bank is safe, listen to this carefully, you might as well invest in the bank. Because what does the bank do to your money? Do they keep inside the safe? Lock up and then every day go and count. No, right? They go and invest your money or they go and lend to other people. So they are making money from your money. I'm not saying that they are not good. Some of you suddenly look very angry. Wow, how come the bank do this to me? Okay, but the key thing is they are very good in using the funds. So myself, you invest in the bank at the correct time. Okay, so this is a one pointer. Okay, so subsequently, I run this Value Investing Academy where we research into methods, research into specific stocks that we can invest in. Do you all know what to invest in now? You want to know? Don't want to? Okay. And one thing that I'm very proud of, right, is I met this lady. From what I understand, I'm the first Singaporean with my partner to meet this lady. This lady, okay, who is she? Who is she? And why is she so important? Let me give you I'm going to test you with this important question. You all tell me who she is, okay? So this lady, her name is called Mary Buffett. Mary Buffett, okay? So what happened is, this is the son of Warren Buffett. He's called Peter Buffett. So back then, Mary married Peter Buffett. Meaning to say, Mary Buffett is Warren Buffett's daughter-in-law. This question is so difficult. Okay, daughter-in-law, right? What, genealogy class. Okay, but the key thing is, right, she learned directly from him. And what is so important, later I'll share with you, it's very different reading from books versus learning from someone who actually learned directly from him and explaining to you certain things. And from her explanation, right, my investment began to improve a lot. And I'm going to explain to you all today, okay? So let's move on. Okay, of course, okay, wait, important advertisement. Okay, this one is my book. Subsequently, I compile her ideas right into my own book. So it's actually selling now, okay? It's called Gone Fishing with Buffett. And it's very interesting. After I wrote the book, right, I sent to my publisher. And I used a lot of Warren Buffett's quotes and a lot of things that he said and his ideas. So my publisher asked me, hey, do you ask permission or not? They said, must ask permission or not? He said that, do you know that there's this guy called Stephen Covey, he sued a Singaporean for, I think, 1.2 million for quoting him. Well, so I became very scared. I quickly wrote to Warren Buffett. He has an email in Berkshire, his company. And guess what? He actually replied. And he allowed me to use certain portions. So it's quite interesting. He actually replied to the email. Okay, so who is Warren Buffett? I already mentioned, third richest man, has a net worth of, net worth, 50 billion. Do you know how many zeros are there in 50 billion? Some of you calculating, billion. There's 9 zeros behind the 50, okay? And what is interesting is this. Why I am very interested in his method, right, is because before I understand his method, I was dabbling around with other methods. But I realized his method has been proven over 60 years. 60 years. Because he has been getting very good results for 60 years. Can someone be lucky for 60 years? We wish, right? But okay, no. But if it's not luck, then it must be skills, correct? And in fact, it's not just him. Besides him, there are a lot of other investors. In fact, you look at the famous investors, right? Only less than 1% consistently beat the market. If you can dissect their name, you say you pull all their name out, you understand their methodology, most of them, I'll say most of them, are value investors. They follow a certain methodology behind it. So I'm going to go into it. Is that okay? Is that okay? Can you imagine like what this wealth would, this ability will do for you? Okay? So of course, one thing is beating the inflation, but more than that, okay? I don't think these people are concerned about inflation, okay? These people are very, very rich, multi-millionaires or billionaires, okay? So the thing is what is value investing? I'm going to point out some keywords, so I want you all to repeat after me so that you can remember, okay? The first thing is, Warren Buffett said our method is very simple. We just try to buy good businesses. Can we say the keyword together? We just try to buy? Okay, thank you very much. Okay, well, Saturday morning, must warm up a bit. Okay, why good businesses? You see, stock market, right? The stock market is selling businesses. Do you all know that? So in fact, when I share with my friend, I say, hey, value investing is very simple. We just try to buy good businesses. Then I have a friend, he's called Adrian. He always, you know you have some friends, right? He likes to challenge you with the most sarcastic way possible. So you say, well, Sean, you say buy good businesses, then I go to the stock market anyhow, buy can already, right? Then I look at Adrian, I say, hey, Adrian, I say good business, right? What are you talking about? You cannot anyhow buy, you must buy the good ones. So Adrian said this, he said, hey, Sean, see, a business must be good before it can get listed. So when you say all the listed stocks are good businesses, then I say, okay, I see your logic there, but Choto Mate, wait for a while. We'll go through some of them and see what is good and what is not so good. In fact, some of the speakers have already gone through that, so we will just reinforce that, okay? And the next thing is to buy them at a, what price? Sensible price. Okay, what does it really mean? We have gone through a bit of that. I'm going to share with you what I learned from Mary Buffett, how Warren Buffett does it, okay? Okay, so let's go into it. To begin off, where to find the good businesses? Of course, if you go into the stock market, there's a whole list of them. There's a whole list of them. In fact, I think in US there's 8 over 1,000. In Singapore there's 1,000 over stocks. And it's adding and deducting every day. Okay? So where to find? Okay, there's a few places. My suggestion, right, is to find businesses that you are involved in. Or some of you say, no, I don't, it's none of my business. Okay, but what do I mean by that? Find things that you are using, certain products that you're using. So this is a picture of me and my family. I have an addition of a new girl. And these are the products that we use. I was just doing a stock take the other day. And I think, hey, which are the ones that are listed, which one is not? Okay, why? Once you use a certain business, products, or services, you have a certain understanding of how they make money. Does it make sense? Makes sense, right? Okay, you understand their products, you understand their services, that's why you pay them. So you can start to actually analyze and start to ask yourself questions about the business. I'm going to give you certain methods on how to ask questions about the business. Okay, so I have a whole list. Later we're going to go through some of them as a practice. I know you all come here for a talk, but can we do some work together? So we can work out becoming a better investor. Okay, so what to buy? I'm going to show you a short clip. When I talked to Mary Buffett, I recorded it down. I'm going to tell you, in fact, it was mentioned. So you all listen to what she said. What are some of the criteria that Warren Buffett look at? In fact, one very important criteria. Okay, let's listen to her.
The earnings of a company.
Okay, earnings of a company.
Right. And he looks at a company over a 10-year period of historical earnings. And if they're going in the right direction, which is generally up and consistent, then that's a good sign. So he would say something like, I look for companies that I can reasonably predict what they're going to be doing in 15 years' time.
Okay, do you all get that? So what does Warren Buffett look at, or what does value investor look at? You didn't get that. Earnings. Okay, can we say earnings together? The earnings. Because when we talk about good business, basically it's a business that can make money. Does it make sense? Okay, business that can make money. So in fact, when we look at the names of the business, right, sometimes we think, wow, they are making money. But are they really? So how do we do that? We look at the track records. So we're going to go through some of them now, okay? So I'm going to use this way to help us remember how to look at a good business, how to analyze it. So I use this acronym called GST. What does GST stand for? Okay, don't say it because some of you get upset. Okay, so what does GST for investing means? The first thing is we must understand how the business generate profit. How does it generate profit? Okay, and the next thing we want to ask is whether it is sustainable. The way they make money, can it sustain for the next 5 years, 10 years? Okay, just now, Mr. Robert mentioned we like to sleep at night. Some of you don't need at night. Some of you sleeping already. Okay, so we like to sleep at night. We want to buy businesses that we are confident of. We are confident of. So, example, just now, where's my list? Okay, my list of businesses. Let me ask you, how does Boeing generate, how does Boeing generate profits? How does Boeing generate profits? Anyone? What do they sell? They sell airplanes, correct. Is this way sustainable? Are they going to be, can they sustain the kind of profits they make by continuing to sell airplanes? Will people continue to use the airplanes? It's either yes, or it's either likely or unlikely. There's no total confidence, right? So likely or unlikely. Of course, I have more ways of analyzing it. I use this thing called a step analysis. We look at the social, cultural, we look at technological, we look at economics, we look at political. There are a few ways, and we also look at the barriers to entry. But we look at them. Maybe let me ask you another one, something you're more familiar with. Okay, Resort World. How does Resort World generate profit? Resort World. How? Oh, sorry, you go there and lose money for them. Okay. How do you know, sir? Are you a loyal customer? Are you helping them to generate their profits? Is it sustainable? Can they generate profits the same way for the next 5 to 10 years? Yes, sir. Those shaking one is really loyal customers. You know that you'll support them for the next 5 to 10 years. Okay, but you see, this is the way we look at businesses first. But that being said, we must also look at this thing called whether is it tested, or we look at the track records. What do we look at? Track records. Can we say that together? We look at track records. There's a lot of claims out there. Everyone will say their business can make money. Correct? Nobody say, I'm going to set up a business that's going to lose money. No, everybody's going to say, I'm going to make money. But we're going to look at the past 10 years. If for the past 10 years they have not been making money, what makes you so sure for the next 10 years they can? Does it make sense? But if for the past 10 years they can, likely the next 10 years there's a certain amount of level of confidence increase. Okay, so let's do the practice. Just now, you can see some of the businesses. I'm going to show you their earnings for the past 10 years. Okay? Then we see which are the ones that have been consistent, has track records, and which are the ones that doesn't have. Okay? Okay, FedEx, let's take a look. How, good or not? Oh, some of you shaking hand. Shaking head, sorry. Okay, USANA is a supplement company. Is it good? Okay, SingPost. Okay, so now you got better sensing. Okay, out of these three, which are the ones that, who will be interested in FedEx? Just nobody, okay. USANA, okay, some. How about SingPost? Okay, more. Okay, so we look at the track records to have a better understanding of the business. Okay, let's move on. Singapore Airlines, you all think good or not? Make a guess. Good. The pilot handsome, the stewardess pretty. Let's take a look. Okay, wow, like turbulence like that. Okay, anyway, this is the records they have. Boeing, okay, Resort World, just now we mentioned, right? Let's see how much earnings have contributed. Actually, they've been losing money for a number of years, going up. I think this quarter they report another loss. Okay, they report another loss. On surface, you may think they can generate profit, but we look at the records. Does it make sense? Okay? Okay, let's move on. SMRT, wow, this one, solid company. The company is solid, the trains, even more solid, okay? Okay, let's take a look. Wow, breakdown still can earn so much money, very good, okay. But anyway, it's an amazing company. Even breakdown, people still queue. Okay, still have to go back the next day. They won't say, I'm not going to take MRT anymore. Okay, Vicom. Vicom is very interesting. How does Vicom make money? Anyone knows? Car inspection. And this guy is very sneaky. You know why? Every year they increase the price. You all know that? Okay, but we go there every 2 years, right? So we do not take notice. The COE, wow, increased by so much. So Vicom increased by 50 cents, we don't know. But look at the kind of earnings they have. Wow, okay, some of you salivating already. Okay, relax first. Okay, what's more? Okay, REITs, they talk about REITs. Suntec. Let's look at Suntec. Oh, it doesn't mean it's not good. There's one spike up, then subsequently went down and go up again. But we want to ask ourselves whether we want to buy this company, they have this kind of records. Okay, next one, ARA. ARA manages the REITs. Okay, so let's look at whether the REITs is better or the managing company is better. Oh, this is almost like model answer like that. Okay, so we have a better sensing. And out of my just now, I think 10 lists. I'm left with 5. So I filter off those which does not have good track records yet. It does not mean they are not good. But in my opinion, I want something that's consistent and stable. Does it make sense? Okay, so we have talked about what to buy. Next part, we're going to talk about sensible price. What kind of price again? Sensible. Okay, what's sensible? Again, I'm going to show you a video of what Mary Buffett says.
To buy business with great underlying economics at a sensible price. So what does he really mean when he says sensible price?
Yeah. Okay, first of all, companies with great underlying economics. We already know that.
Yep.
He likes to buy $1 for 50 cents. So how do you do that? Well, so the question becomes, are you willing to pay $44 billion for a company that's earning $1 billion? And of course you're not. And that's business perspective.
Okay, that's business perspective. Do you understand what she's saying? You understand? In fact, when she first said that, I don't understand. I said, hey, can you repeat that again? What do you mean in proper English? Okay, so I'm going to tell you this. She mentioned 2 things, okay? 2 key things that I actually cut out from the video. The first key thing is Warren Buffett. He likes to buy $1, but he wants to pay how much? 50 cents. How many of you will want to do that also? Okay, so what does that mean? So if let's say I got, okay, $1 quite hard. If I got $2 note, right, and I say, hey, I'm going to sell you for $1, who will want to buy? Serious? Okay, who got $1? I sell to you now. Seriously? Anybody wants or not? Hey, nobody? Okay, first of all, must assess, right? Check whether it's real or not. Correct, or it's the correct face. Okay, hey, ready? I'm going to sell you for $1. 2 liter. Okay, 2 liter. Later. So you see, the key thing is, right? The key thing is, you want to know how much the value of the stock is worth. The value of the company. Because the value and the price differs day to day. Every day, let's say, for example, McDonald's. McDonald's stock price will go up, will go down. Up, down. Does it make sense? Okay, when it goes down that day, does it mean the McDonald's around the world is selling less burger that days? No, but the business is still going on, correct? But the price will go up and down. And okay, how do we know how much to pay for a company? So she asked, will you pay 44 billion for a business that's only earning 1 billion? Yes or no? No, right? Anybody bought Facebook shares? It is going around that price at the point of time. It was about 40 over times. People still buy. They didn't look at it from a business perspective. They are hoping that in the short run, the price goes up. But when you look from it from a business perspective, it's very different. So let me illustrate a bit more. Okay, by the way, buying $1 for 50 cents, we call it buying at a discount. More Singaporean vernacular discount, okay? So you turn to the guy beside you, say, I only buy stocks at a discount. Okay, because you're a value investor, correct? You only buy stocks at a discount. Okay, I'm just going to skip this. But I'm going to show you something. Okay, for example, they always talk about higher risk, higher returns, correct? So if you want higher returns, you must take higher risk. Does it always goes like that? From a business perspective, it's very different. You can have lower risk but higher returns. Do you all want that? Okay, we want that, right? It's very simple. For example, we talk about Viacom. It has been making money consistently year after year. Next year, do you think they will continue to make money? Yes, and in the next few years, you go on. You have to inspect your car, correct? Before you can you update your road tax. Okay, so I'm going to the earnings per share actually went up to 25 cents and more already. I'm just going to take an example. For example, they are earning 20 cents per share. Every share is 20 cents. Every share is 20 cents. Okay, follow with me this equation together. So you know the stock price, it will go up, it will go down. It can go up to $4, it can go down to $2, it can go even further down to $1, depending on news, sentiments, and so on. Does it make sense? Okay, you'll go up, you'll go down. So let me ask you, what is your risk? Let's say when you pay $4 for the stock, what is your risk? How much have you risked? So difficult. Actually, you risk $4 because let's say anything happened to the stock, $4 is gone. If you pay $2, the risk is $2, and so on. Okay? So if you pay more, the risk is higher. You pay less, the risk is lower. But let's look at the returns. We call this earnings yield. If you pay $4, and you're getting 20 cents. You buy the stock, or you pay $4, then that stock give you 20 cents. Every year give you 20 cents. How much is that? How much percent in terms of percentage? The return on investment is actually 5%. 5%. Does it make sense? Okay, if you pay $2 and the stock gives you 20 cents, what's the return on investment? Okay, come. Wow, this one's so difficult, man. Okay, you all say this together. Okay, you get 20 cents for $2. The return on investment is 10%. Okay, thank you. And $1, If you pay $1, it will be 20%. Okay, so let's look at that. Which one is the one with the highest return? How much? You pay $1, you get 20%, but your risk is lower. This can only be done if you look at it from a business point of view. Do you get what I mean? So that's why most of the value investors, they will say things like, risk is protection. Rather, risk is not knowing what you don't know. So this, if you don't know how to invest, it's risky. If you know how to invest, it is not really risky. Okay, so a very quick example. Okay, Johnson & Johnson. Okay, Johnson & Johnson. How do we determine the value of Johnson & Johnson? We look at how is the business doing, right? So in the real world, so the real world, right, Johnson & Johnson is operating, they sell baby stuff and stuff like that, right? So the parents will buy shampoo and stuff like that for their baby to eat, to bathe, okay? So this is the business. But you see, so this is the value of the business. But the price of the business is determined in the market, determined by the economy, by interest rate, by news, correct? But you realize these two may not be aligned. So for example, the value of the business, you see, the earnings per share or the earnings is going up. It's a very nice straight line for Johnson & Johnson, okay? But let's look at the stock price. By right, if the earnings go up like that, right, the stock price should also be like that, correct? Does it make sense? Logically speaking, it should be like that, right? But it's like that. You go up and down, up and down, up and down. Okay, so up and down. So the thing is, right, when you know when to take opportunity of it, you know, like you calculate by earnings here, you calculate by, we use certain things like discounted cash flow, certain ways of evaluating the stock, you can actually profit from it. So personally, okay, my personal example was, okay, I actually bought Johnson & Johnson, I got about 23.77% that year. And more examples. Okay, this is the, okay, this I cannot go through everything, I don't have enough time. But I want to actually give you all this calculator for free and teach you how to use it, okay? So remember to remind me later if I forgot. This is an Excel spreadsheet. You can actually key in certain numbers, you can get a certain stock price, how much the business is worth. Because you know how much it's worth, when the price goes down, what do? Buy lah, correct. $1 for 50 cents, right? But just now I give $2, nobody won. Okay, so IBM was another one of my personal examples. It actually went down, although the earnings per share goes up. Up all the way nicely, but it goes up and down. Okay, Viacom, this one actually very little chance. Very little chance. But in 2012, there was a certain point of time, the P ratio, I think, fall around 11. And that was a good time to buy, around here. Okay, so when to buy again? It's actually you buy at a discount. Can we say that together? We buy at a discount. When you buy at a discount, that's how value investing makes sense. Because the whole idea of value investing is to buy below the worth. You buy below the value, okay? Okay, so we talk about certain stocks that I have personally experienced. What about currently? What kind of stocks am I looking at? Do you all want to know? Yes, okay. Then you must buy my book. Okay. That's not the thing. Actually, what I want to say is right. Because why do I call it gone fishing with Buffett? You can give certain people stock tips. So you give the person a fish. But it's different when you teach the person how to fish. So like Mary Buffett taught me how to fish, I begin to know how to fish for stocks myself. So I cannot give you stock tips. Then what are these pictures doing here? Okay, I better erase them. So there are some stocks that I'm looking at, and I cannot tell you tips, but we can do case study together, right? See, look at the earnings together, look at how much it's worth together, right? So these are the things that I will tell you, direct you to certain resources. Okay, certain resources. Okay, Warren Buffett said this. The first thing you should invest in is yourself. When I was reading the Warren Buffett story, right, his story, when he started to want to learn how to invest, do you know what he did? He didn't buy my book because back then I didn't have a book yet. He actually bought the book of Benjamin Graham. And after he bought the book, he flew over to Columbia University to learn directly from the master. Do you know that? So I was just thinking back then, if let's say he hasn't went there and took the extra step to invest in himself, where do you think he will be today? Will he be the world's richest person? Third richest? Do you think so? Maybe he'll be driving a truck, right? Okay, so we don't know. But the thing is this, what did I do? How did I first invest in myself? So I read books. And out of the books that I read, right, this one I strongly recommend Mary Buffett's book. Because I read a lot of Warren Buffett's book, her books are the simplest to use. The rest, a bit chim for me. Too much detailed calculation and too much statistics. So for me, I prefer something simple, and she teaches you step by step how to do it. So I read her books. After I read her books, I began to invest. That was a scary part. Reading is one thing, really investing is another thing. It's just like dating is one thing, getting married is another thing. Okay, not related, sorry. Okay, so anyway, Anyway, after I invest, I went to learn from her. I flew over, we took a video with her, we spoke to her. And let me tell you, talking to her directly is different from the book. You know why? Words is only 7%. So for example, someone say, you are very good looking. Okay, you are very good looking is the words, right? So you interpret as I'm good looking. But somebody say, hey, you're very good looking. I mean, in a tone, right? You know that it means different thing, okay? So again, let me give you some examples. Like because she actually learned from Warren Buffett himself. She knows what he's talking about and what exactly he means. He mentioned this. This is the Warren Buffett quote. Diversification is protection against ignorance. And he also say, don't put all your eggs in one basket. Actually he mentioned, put all your eggs in one basket and then wash the basket. He said this, okay, he said this. But what does he really mean? Let's look at his own portfolio. He has 9 different sectors. He has 32 stocks. Is he diversifying? Actually, he does have some portfolio management. So his idea is don't blindly diversify. But people who don't know, they just read the sentence, they say, okay, don't diversify. We straight away just whack one stock, that's it. So you must understand the nuances behind it, the real idea behind it. Another example, he mentioned this. I buy on the assumption that the stock market will close for the next 10 years. If I buy a business, the stock market close, it doesn't matter because the business will continue to make money for me. So one Singaporean example is Mr. Peter Lim. He bought the whole entire Thomson Medical Center from the stock market. So you can't trade the stock anymore. He just run it as a business. But then, listen to what he said recently. He said the same thing, but he changed. I will buy on the assumption the stock market will close for the next 5 years. And in 2010, he reduced it to 3 years. How come it reduces? Okay, this one, Mary Buffett actually explained. Okay, and he actually said this. I think I can make you 50% a year on 1 million. So if you give him 1 million, he can make you 50%. And he said, I guarantee it. You can search. He actually said that. Why is he so confident? His methodologies have, it has stayed, but his certain methods has changed along the way, has improved. Okay, so these are only things you can find out when you speak to her directly. So go and find someone who will mentor you, who will take you out to lunch, or you take him out to lunch, okay, then he will teach you and stuff like that, okay? Then, okay, he also said this, financial derivatives are weapons of mass destruction. So we can find financial derivatives in Iraq. Okay, no, not really, but the key thing is, right, when you read this, so should you use financial derivatives, yes or no? Yes and no, okay. Depends on why you want to use the weapons of mass destruction. For himself, you look at his letters to his shareholders. He actually used options to increase his positions. So although he said that, people will think, oh, it's dangerous, don't do it. But he said you must use it in a way that's correct. Okay, weapons can be used in different ways. So you must understand. Okay, so after learning from her, right, I actually went into certain stocks that improved my returns. So for example, this stock itself, Wells Fargo company, I went in and then I used options on it, and then this one I gained 32% per year. This one is for the past 3 years. After I met her, I improved it even further. Okay, so these are very interesting things. Even though it's going sideways, right, you can see the stock is going sideways, but you can actually use options to increase your returns. If you do it correctly, you don't anyhow go and do it. You must learn the proper things, can? Okay, so my question is this. Okay, this one I need your response. If she can spend 1 day with you and teach you, will you want to do that? How many of you will want to spend 1 day with her to learn from her? 1 day not enough. You want 5 days? Okay, for me, I flew to US. I spent about half a day with her. Okay, and let me tell you this. After we spend the time with her, right, we think that it's so important that we should bring her over to Singapore. So we're going to bring her over to Singapore. Do you want to meet her there and learn from her? Because she's going to teach you, okay? So, okay, very good. Steady. Price. We talk about value first, then we talk about the price, correct? You must see whether it's worth it first. Okay, it's on the 8th of September, so please write down. 8th of September, go and check your calendar. Go and call your friend, cancel the appointment if you have. It's from 9 to 6 at Marina Bay Sands. We are going to learn value investing. We are not going to Marina Bay Sands, to the wrong part of the world, okay? That one is lose money. Okay, so this one itself is an Asian value investing conference. Okay, how much, right? How much? So the thing is this. She's going to actually talk whole day. She'll be here whole day, and you can actually ask her questions. It's interactive. You can ask her. She's going to tell you how to pick stocks, how to assess, how to pick, and when to buy, when to sell, and you have Q&A session. So this whole session, right, I tell you how much I paid when I go to US. When I go to US, right, I spend about 20 over thousand because of air tickets, because of tidying up the agent to meet her. So meeting her probably, in fact, if you check her rate, right, it's about 20,000 if you ask her to speak, let's say for half a day. Okay, but because we bring her over, we get a lot of people to share the cost, it'll be cheaper, correct? Makes sense, right? And okay, on top of this, right, we're going to give you bonuses. Because I'm a co-organizer, I have the ability to give bonuses. We're going to give you the calculator. Remember just now the discounted cash flow calculator? How to calculate stocks, we're going to give it. And there will be a free workshop on how to analyze the stocks. There will be free ebook on how to invest, and also a free video, the video interview with her. Okay, so how much? Okay, plus, okay, if you actually sign up today, there's a lucky draw also. Okay. No lah, just joking lah, just to scare you only. It's not $5,000. In fact, if you look at the published rate, right, it's only 138. 138. But our co-organizer is Philip Capital. So we told, they are in charge of the ticketing. So we asked them, hey, because I'm going to give a talk this Saturday, is there a possibility to give our audience more discount? Do you all want more discount? Yes, how much discount you all want? 118 Give you 50% here, 50%, $70. Is it okay? Okay, actually no. I'm going to give you even lesser. Because you say, hey, this one, right, because it's in, I'm going to speak at SIAS event. So the people here, they are really interested in investing. Can we give them a better discount? Okay, so what's going to happen later, right, is this. My coaches around, they will have this slip. They will be standing around, they have this slip. And we only have limited tickets, okay, limited tickets. And the price, right, is going to be crazy. It's only going to be until 1 o'clock. Until what time? 1 o'clock. And seriously, because we negotiated with them, 1 o'clock, Philip Capital is outside already. You can actually take this slip, and after you take this slip, you fill out your name. You know how to spell your name? If you don't know, you check your IC. And make sure it's illegible. Okay, sorry. Make sure it's legible. And write your email, because the ticket will be sent to your email. Write your contact number, and write which date you want to come for the free workshop. Okay, so how much are we giving just for this until 1 o'clock? Okay, but the slips are limited. If you cannot get the slip, then too bad, you cannot get it already. Okay, so for today only, right, it's only $38 for until 1 o'clock. So for those who want, sorry, yeah, lunch is included somehow, you know. So it's like you get a free, you can buy the lunch you meet with Mary Buffett. Lunch is included. Anything else you want? You want massage by me? Okay, so really, those who want, you all raise your hand. The coaches will pass to you. If you are really interested, please don't like take it already then throw away because only limited tickets. Okay. So those who want, you raise your hands, and then after that you make the payment at our booth. Okay. So there's the end of my talk. Thank you very much. Okay, please clap for me. Thanks.